Good evening and welcome to this Tuesday's edition of The Money Show. I'm Nayantara Rai. I'll be your host for the next 30 minutes. The Money Show is India's first and only show dedicated to making you richer, to growing your money every day, Monday to Friday. This show comes to you live from the ET Now studio at 5:30 p.m. A quick alert for all of you. You can send us your queries live. You can email them to us at themoneyshow@etnow.tv. We have a Facebook page. We have a Twitter handle. And of course, our phone lines are going to be open for all of you over the next 30 minutes. You can call in live and get the expert of the day to answer your question. It's Tuesday, which means the Money Show is a tax special. Let me introduce you today's guest. It's Amarpal Chadha, a partner at People Advisory Services at EY, Ernst & Young. Amarpal, always a pleasure chatting with you. Thank you for being a part of the Money Show this Tuesday. You know, before I get down to the viewer queries, strict measures have been announced by the tax authorities to ensure people actually file returns, that they're compliant. We've seen the tax department actually boast about how the numbers have gone up, the returns have gone up, and GST and demonetization have had a big role to play, as I'm sure has a 5,000 rupee penalty that everyone has to pay for being late.
Yeah, absolutely. So you're right in saying that we've seen a large number of taxpayers file their returns even before the due date. So, which is very encouraging and mostly driven by the fact that you have more discipline when you levy some kind of financial penalties on the process. So, I strongly believe that has helped big time. Obviously, we have more taxpayers because of the other things that have happened, which you rightly named, the demonetization or the GST, getting in more people into the tax net. But the filing discipline definitely is a very, very welcome step.
Right, and in fact, as far as corporate taxes go, there have been some changes in the date that have been made, Amarpal, just yesterday, time relief being given.
Yes, for the people who need to get their accounts audited, file the tax returns, they've got a 15-day extension. So you could now do your returns till 15th October.
Okay. Now let's get down to the show for which all of our viewers are always excited. I'm of course talking about the queries. Once again, see the number on your top of your screens. You can call in live and Amarpal Chadha will be answering your queries live, or you can just email it to us as well. The first query we've got is over email from Ajinkya B, who writes, based on my original filing, I got a refund of 30,000 rupees, but according to me and my revised return, I should have gotten a refund of 27,000 rupees. He sent us the copy of his ITR 5 along with the original, which I have already forwarded to Amarpal Chadha. His question is, will I have to pay the extra 3,000 refunded based on the original refund? What do you make of this? Is this a small discrepancy? Nobody wants this discrepancy of 3,000 rupees that will come and haunt them at a later stage, Amarpal.
No, absolutely. I think the taxpayer has been really observant on how he's filed his tax return and discovered the error. The challenge is if the amount is already refunded to the taxpayer, he would need to pay back to the authorities the amount that has been refunded. So in this example, since there is 3,000 rupees which are in excess that the taxpayer has received from the authorities, he would be required to pay that back along with interest to the authorities. So my suggestion would be to make that tax payment and close that matter before he receives any further notice from the authorities, because it's legally due, and generally the taxpayer had actually filed with a refund of 30,000 and then revised the return. So the right way would be to pay the balance taxes.
Okay. So that's the advice that's going in for this particular viewer of ours, Ajinkya B. It's better that you sort this out once and for all. Don't want the situation to haunt you at a later stage. I believe we have a live caller dialing in with his query. Murli Reddy from Bengaluru. Good evening, Murli. It's Tuesday, it's the tax special. What's your question for our expert of the day, Amarpal Chadha?
Good evening, and thanks for your time. I want to know how much FNO transactions are exempted from CA audit.
Yep. So, Mr. Muli, the
Amarpal?
FNO, I am answering that. So, Mr. Muli, the FNO transactions that you are referring to, could you also allude a little bit on the total turnover that you are doing, including the other activities? Because I believe you may also have some of the stock income or stock transactions that you are doing. Because normally when we get into this discussion on whether you need to be audited or not, we need to clarify whether you are in the business of securities or is it like a part-time investment that you do. So could you elaborate a little bit further? You get my question?
Mr. Reddy, if you could hear Amarpal Chadha, he's asking you that can you give us a little idea of the turnover that you do when you do FNO trade? Is this a just a part-time thing you do to earn money and generate more wealth, or is this your business as well?
No, it's just part-time which I do for FNO trading.
Okay. Okay. If it is only...
And Amarpal, second question, can you give an idea of the turnover?
It will not be more than 5 lakhs per year.
Okay. So definitely if it is just 5 lakh income, you do not require an audit because the income limit for any trading operations is 1 crore. So you don't really need to worry about the audit to be done for the FNO.
Mr. Murli, I hope that helps you out. You don't need to worry about an audit. Was that your question, or were you asking if you have an exemption limit?
No, my question was answered. Thank you.
Okay. Thanks so much for dialing into the Money Show. I'm glad you were happy with that. And stay tuned to ET now and keep calling us in as and when you have queries. I believe we have another caller who's dialing in with a live call. Can we be connected to that? There you go, Vikram from Pune. Hi, Vikram. Good evening. Our guest today is Amarpal Chadha, the tax expert. It's Tuesday. It's a tax special of the Money Show. What's your query?
Yeah, good evening. I would like to know from Mr. Chadha that we have formed a society 5 years, and do we have to file tax returns for that?
Could I request you to maybe elaborate a little further? What kind of society? Is it a
Housing
resident
society.
welfare association or?
No,
what kind
it's
of
a Maharashtra Cooperative Housing Society, and we have a deposit of more than 1 crore in our bank. So do we have to file tax returns? This is now 5 years we have.
Yeah. So see, every assessee who obtains a permanent account number is classified as a society or an individual. You are required to file your tax returns because, see, in a housing society, typically you would collect deposits, you would provide maintenance services. So there is a fund which also generates income. For example, the fund you would have collated would have earned some income in terms of getting dividend or a fixed deposit. You would have got interest income. So those income need to be reported in the society's tax return.
Okay, Vikram, I hope that satisfies you and your query has indeed been answered. The show is a tax special. My guest today is Amarpal Chadha, joining in from Ernst & Young. And our phone lines are open. The number's on your screen. So is our email address. Let me go across to the next live caller. I believe Kishan Lal from Gurugram has dialed in. Good evening. What's your query?
I am a trader as a hobby. I do some trading as a hobby, and my turnover is around 25 lakh or so per annum. Do I require auditing of my accounts for filing income tax return?
Yeah.
Amar,
So thanks for the question. I think we addressed a similar question earlier. You don't require a tax audit because the tax audit threshold is much higher, is 1 crore for the transaction. Since your trading is limited to only 25 lakhs, you don't require a tax audit.
okay, Mr. Lal, I hope that satisfies you. You are within the limit of not requiring to carry out an audit for your hobby of F&O trading. I'm going to move on now to the next query. It's from Sachin Padya, who says, I just moved to India after staying in the United States for 7 years. That makes my stay for the US financial year as 197. As India follows April to March financial calendar, I will also satisfy the plus 186 days rule for India. My US income tax has already been withheld. My company says they're going to deduct my tax for the salary in the US and in India. I should be a non-resident but ordinary resident, that's NROR, earning in the US should not be taxed. Please let me know what my options are. Would a person have to be a resident of India for income tax purposes if he or she is in the country for 182 days or more of a financial year? That's quite interesting, being taxed twice over in 2 different jurisdictions. What would be the best way forward for this particular viewer of ours?
Sure. So the question has, I think, 2-3 parts. Let me try make it simpler. So the person is working in India. So when you are working in India, there is a tax event in India because the services are being rendered in India. So to answer the first question, are you taxable in India due to your presence in India and working for Indian entity? Yes, that would mean that you need to pay taxes in India. Also, as you mentioned in your fact pattern that you've crossed the threshold for number of days in India, and given that you are an Indian citizen coming back and working in India, even if you spend 60 days in the financial year, that is April 1 to March 31st, and 365 days presence in India in the last 4 years, you would qualify as a resident. So in both scenarios, you will become taxable in India because you are rendering services in India. Now your question would come back to the point that what happens in US because you are getting paid in US and the US company is also withholding tax while they are making payment to you. So to avoid dual taxation, there is a treaty between India and US. So you are able to take credit of one country's taxes in the other. In this example, if you qualify as a US tax resident and US is going to pay your salary and deduct tax, they could evaluate giving you credit for the India taxes that have been paid. Yeah. The other option that you could have is if you are a resident and you qualify as an ordinary resident in India, you could also evaluate the position of taking credit of the US taxes in India. So depending upon the fact pattern of where you will break residency, a decision could be taken to take credit in either of the countries. So in a nutshell, you should not be liable to double taxation. You should be able to set off taxes of one country with the other, subject to certain calculation conditions which would determine the amount of credit.
Okay, I do hope that will help our viewer figure out the best way to be tax efficient given this peculiar nature of the problem. I'm going to move on. We have another live caller, D. Mohan from Bengaluru. Good evening, Mr. Mohan. What's your query? It's a tax special today.
See, I have a query on futures and options. See, normally in futures and options, if a person do trading, an audit is required if the turnover is in excess of 1 crore. But generally in futures and options, if you trade in futures, one lot itself will cost, the lot size itself will be close to 10 lakhs or 5 to 10 lakhs. So basically a person buys and sells, that itself will be close to 20 lakhs of turnover. So 5 lots to 10 lots, if a person buys, it will cross 1 crore very easily. So how is that turnover considered?
Yeah, so you will have to look at the value of the trades that have been done and then determine the turnover. Obviously, if it exceeds more than 1 crore, you would be required to get an audit done. Maybe in a specific fact pattern, if you look at the number of trades that have been done and the volume of trade, you could make a decision accordingly.
Okay, Mr. Mohan, I hope that satisfies you. That's exactly how you're supposed to figure out and then see if you need to be audited or not. A lot of FNO traders calling us on this edition of the Money Show. I believe we're being joined by another viewer now on the phone line, Vinayak Khanna from Kolkata. Good evening, Vinayak. What's your query? Is it on tax?
Absolutely. This is regarding an unlisted shares. I had invested some amounts in unlisted. Right. Now, I invested some 9 lakh rupees on it. Now, the company is on a buyback now. Right. So, what is my tax implication? Because they are stating in the document which have been provided by them as it is a dividend which is being paid to us. And they are paying dividend tax on that total amount of that buyback amount themselves, that company particular. So, to be specific, it is Syngenta India Limited. It's unlisted share, sir.
Okay. See, unlisted share, if you are getting a dividend and they are paying dividend distribution tax on it, there is no taxable event in your hand and the dividend is exempt. But if it is a buyback and you are getting a consideration that is being paid to you for the purchase price, then depending upon the holding period, your gains would be long term or short term, and given it's an unlisted share, you will have to look at 24 months as the period. And if it is a buyback and you are getting a consideration, there would be capital gains. But if it is only a dividend payout, then there is no taxability in your hands subject to the dividend distribution tax being paid by the company.
Document they say that that is, they are stating it's a dividend, but that I've accepted. But
so just to clarify, see, if the document says that, sorry, please go ahead.
Taxation aspect.
See, from a taxation perspective, if the document that has been given to you says it's dividend that has been paid, it is dividend. So you cannot debate otherwise. So they are not buying back your shares, you've not surrendered your shares, that means?
Vinayak, have you surrendered your shares?
Yeah, they'll be taking those shares actually. But they're stating in that language. I fail to understand actually.
Yeah, it's a strange situation. So maybe we could connect offline and look at the document that you are mentioning, because as I mentioned earlier, it's pretty clear. If it is a dividend payment, it will be dividend distribution tax. If it is a buyback, then a buyback provisions will apply and they will pay you a consideration in form of a buyback payment, which will lead to capital gains in your hands. So probably we need more clarity and to look at the document that you're referring to.
So, Mr. Khanna, I tell you what, why don't you send us a detailed email with all of these details that Mr. Amarpal Chadha is also talking about. The email address is on the screen. Send us that email, and next Tuesday is once again a tax special, and we will certainly take up your query again. Till then, thank you so much for taking the time out and joining us here. I'm going to move on to the next viewer query because we are running out of time. Saili has written in, I have a FD of 40 lakhs on which I'm earning interest and paying taxes. Can I transfer the entire amount to my mother who's in the 10% slab? Will the interest be clubbed to my income or my father's income? What's your advice, Amarpal?
Yeah. So if you have a fixed deposit that is earning interest income or any other investment for that matter, if you are gifting that to your parents or to your relatives, the income that arises from that, in this specific case, when you give the fixed deposit gifted to your mother, there will be no clubbing either in your hands or in your father's hand. It is just a gift, an income that is earned on this gift will be taxable in the mother's hand, and if mother is not in the taxable bracket, there will be no tax on this.
Okay, I completely out of time, so I can see a lot of queries are coming in. So for all our dear viewers who are tuning in regularly to the Money Show, next Tuesday will once again be a tax special. So worry not, we will take your queries. Thanks for watching this edition of the Money Show. Special shout out to Mr. Chadha for being so patient and being with us for the last 30 minutes. With that, it's a wrap. Many thanks for watching.